This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Amelia Martyn-Hemphill, and together we bring you Morning Call. We're seeing mixed markets around the world as Europe remains flattish, even with weaker than expected German exports. Asia's mixed as the Shanghai finally opens with a 3% move higher to play some catch up with the other areas in that region.
Yeah, so I'd say overseas markets are probably taking it in stride. You know, Europe's had a big 2-week move, almost like our 3-day move, and you know, with more bad news coming out about the economy there, you would think that perhaps it would sell off a little bit more, but you know, Europe's flatlining. If you look at the symbols of, you know, of the DAX with the HEDJ, HEDJ, you'll see that, you know, at times it's a tailwind, at times it's a headwind, at times it needs a rest. You know, the first quarter was when you had this big, strong trend above the 8 and 21 day before that small head and shoulders top pattern built. Remember that? We pointed out way back when. Left shoulder, head, right shoulder, broke the neckline, gave you your first move down. Okay, and then all of a sudden you had a big wall of resistance, and then boom. So now, you know, fast forward to where we've been for the course of the past 2 months, and almost the same thing as our markets. You had your double bottom, August 24th lows, double bottom, big engulfing day last week, big gap up. It held the gap, showing some power, and now all of a sudden, back into the upper end of the range, being very overbought. You know, you would think that, you know, it would go sideways. So, you know, not the end of the world here. Looks very similar to our markets, and perhaps, you know, can get another move up towards the 200-day or not. As far as Asia is concerned, you know, you had the Shanghai close for about a week, and the market kind of cheated and figured it was already going to be up because of what was going on in the Nikkei and going on in HK. So with that being said, you know, this actually might be down today because, you know, their markets closed somewhere around here, around 3,200, and the market kind of thought that it would get up to almost 3,500. So if the ASHR is down today, don't be alarmed. It just priced in a little bit too much, up 3% versus up almost 5 or 6. So anyway, you know, here is your move. We talked about it, getting back to this moving average. Hopefully you sold some, not cheating for a big open, and you know, now you'll see if you know, support comes in here. But overall, you know, decent action in the overseas markets. They haven't been, you know, a headwind, more of a tailwind lately, and tonight, you know, or today they're kind of neutral.
Our markets had a bit of volatility yesterday as it still can't get above that 50-day. Futures down 8 to 9 handles this morning. How are things looking there, Scott?
Yeah, I would say pretty much as expected as well. You know, the question is what type of speed are we going to have, and what type of digestion needs to happen in order to perhaps get higher prices, because the move from last Friday to Monday's close was fast and furious, to the point where it's developed into this pain trade where some people are caught short in pain, and some people who were long took profits early, so they're in pain, and some people have missed it, so you know, no one's feeling so hot, you know, hunky-dory. Anyway, you look at the chart here, and this is what the SPX looks like. You know, you had your low from August 24th. You then had your higher low with a nice red dog reversal that could have had you switch some gears, and then you had another red dog reversal on the jobs report Friday. Cleared this pivot to show some strength, so that was your adjustment area, and now here we are right back towards the upper end of the range. So the question is, you know, can it hold higher here and create a high-level flag above 1970 and then blast off to retest where we failed when the Fed didn't do liftoff, or maybe even a little bit higher? Or does it come below this, shake the tree a little bit, and you know, retest a bigger support spot and then try again? So at this point, down a little bit today. We'll see what happens. Right now we have at least a floor of 1970 to trade against. If it closes below that, 1940 to 1955 is next. If it holds above this, then at some point, this key inflection point could give you another technical pivot area to trade through.
Oil has had a feisty move recently. We saw some profit takers come in yesterday around 10:30 when those inventories were higher than expected.
Yes, everyone's been talking about how oil needs to go to 20, especially Goldman Sachs a few weeks back, and it didn't go lower, so you had a nice move to the upside, and then at 10:30 the inventories came out where the inventories were a little bit higher than expected, so that capped the recent moves. So now the question is, what's next? You look at the USO and you will see that here was that first wake-up call when this descending channel broke to the upside. Okay, that is your hello, I might be back in the game type of move. And then when the markets all came back in to retest the 824 lows, what did oil do? It held higher, went sideways, so it gave us some clues that maybe there's a trade here. And then that's what you had, a trade. And at this point, you had a small down day yesterday. Doesn't mean the oil move is fully over. It just means from where the oil was, I think, at 44 to almost 50, it's going to consolidate. Same way the USOs went from 14 to almost 16. So now we'll see, what kind of digestion can you have here. So here is just say 1540-ish. If it could hold above 1540-ish, chances are it continues, and it could actually even come in a little bit closer to 1510 and still be fine. So in order for this move and for oil to stay with a bid, I would think this 1510-ish area holds, and that in turn would also be good for the oil names that had a decent sized move. And this has already been a nice move off those lows where you had the August 24th low, you had a higher low. Here was your engulfing bar to cover shorts, maybe get long. If you did so, you made a nice move, and it already went back to my target 1 area. So we'll see if it could go sideways here, let the moving averages catch up, and then head into some bigger resistance towards year end. But as of right now, oil names are somewhat overbought. Just like the markets, I'd give it a little bit of time.
We saw those bios perk up a little bit yesterday, trying to stay constructive, it seems.
Yeah, there was actually a constructive trade. Yesterday, if you remember, when the S&P came off around 11 o'clock after the oil fell off, the bios held in there. So when the bios held in there, traders were like, okay, let's try and play a bounce. I'd say Mark Sperling on the floor wound up getting a nice basket. The VTF saw it, and boom, there was your trade. You look at the IBBs, overall it doesn't look like much, but there is action on the 5 and 15 minute chart if you follow them. So as of right now, maybe draw your line of support here around 295 to 297. Here is your upper resistance area, and then you have a small pivot right here. So there's a bit of an air pocket if it wants to come back to the upper end of the range. So at this point, maybe look at, again, the support here, 295 to 297. A break and close below this would probably bring out some bears, but as long as we hold this area, perhaps there's still a bit more upside in front of it.
So the recent action in stocks has been a bit different, where we've been seeing the most beaten down names getting the most action, as we've seen in the casinos yesterday.
Yes, yesterday and since Friday. What do you look for a move to start again? You look for a big igniting bar, especially when things have been just thrown out the window. So this is what we call a treasures for trash trade. If you've been looking at WYNN, WYNN has been fully annihilated from all the way back from. Look at this trend to the downside from north of 200 and change all the way down to where it went up down to. So, you look for some kind of signal that maybe there's a new trade coming, and that's what you got on Friday. If you remember Friday, look at the size of that bar. Friday gave you an igniting bar that said, okay, perhaps this little downtrend is over, and it had huge volume to cover shorts, maybe get long. And that was when the futures were down too. It was the first one to go up. So since then, you've had 4 more days. And this doesn't look like much, but this could make you a lot of money as a trader. And what has it done overall? All it did is come back to where it was in August, okay? Not even. This is September. So I know, guys, all you want to do is short this, which is okay, but just remember, over the summer, this thing was almost as high as, 90. So if you just have short in the brain here in these casinos, I would just make sure you be a little bit careful, because it could always go further than you thought. So at this point, I'd love to see a little bit of a rest, and then if it does, hold this, say, above this little area, perhaps you get another move. But if it just continues to go, there's going to be some guys that are just shorting this, and remember, this thing was 200, okay, like way back when, which is obviously way back when, but even to start the year was 140. So it's still 50% from this, and who knows from that. So just be careful that these things can go a little bit further. Same thing for LVS. LVS woke up, and this too, from the 90s all the way down to where it is. All this did is take back the last overthrow. So you had a quick trade back here. So it might want to come up and retest this zone. So just take care if you just have short in the brain here with the casinos, and if you did catch the this crazy oversold long by watching this igniting bar, congratulations. Now let it go sideways a bit before we figure out if there's more there.
High beta tech's been somewhat out of play, with Apple still showing some relative weakness there, Scott.
Yes, Apple has been a head scratcher. Maybe it's because their corporate buybacks haven't been going on because they're getting closer to earnings, and Apple has a huge corporate buyback program, so that's where some of the volume has gone, because probably most of the market owns Apple already. So without the corporate buybacks, it's a bit lethargic. Overall, you look at the chart, again, a lot of the bears keep pointing to this weekly head and shoulders top, which you could see. Okay, you could see a big rounding channel that broke way back in the beginning of the year. A bit of a nice trade on that August 24th lows, but you do have a right shoulder that's hovering below the 200-day. So that long term, is giving you a little bit of a signal to take some care. But like we've seen before, on earnings, if they deliver and it gets above the 200-day, that could change that. So until then, there's really not a heck of a lot to do here. Yesterday Apple was down like $1.75. Everyone was saying it was going to fall apart, and then it bounced right back up. So not much room to do, or to do things. This is support, okay, which is 107, and then you have, I guess, a little bit of a higher level support, and then there's just resistance at every level above. So I actually haven't really been trading Apple that much. I watch it here and there, which it's been acting weird anyway. So at this point, it's just in this little spot, and there's better action in other places.
Google, Amazon and Netflix have all taken a few days off, but it seems like the patterns are building. What are your thoughts about those, Scott?
Well, these three patterns are all above their moving averages versus below, like Apple. So the question is, are they set up for new highs through earnings? So at this point, they do look pretty good. You look at the chart, they have taken a few days off, and some of the guys on the floor have been buying into support. So if you've been buying Google into this three-day support, you're getting paid as as it's been coming off those lows. So question is, can you actually buy it high and sell it higher? And if that's the case, this is what Google looks like. Okay, here's your support. You have 658. As long as it holds here and goes sideways, it's building a higher floor to perhaps get a move through. And that resistance here is 678 to 680. You could look at the same thing with Amazon. Amazon also has a new high-level floor being built. Okay, great looking pattern above all the moving averages. Here is your high-level floor, okay, where it's been going sideways. It's been out of play while the market's been strong, but still, it had a feisty move beforehand. So here is that spot. As long as Amazon holds above, just say, this 529-ish area and builds a flag, maybe you get a better trade above this if the market wants to go. And Netflix as well. You have this 3-day just out of play nothingness, and that's good sometimes, especially considering we had a decent move before then. So if you are in some of this small, I would say give this with a stop at 105, and if you're in like tier 1 now, it starts getting above yesterday's high of 109.78. You can cheat a little bit, because if there's real volume and they want some leadership above 112, it could be on its way back towards highs, and it's still hovering above the right side of this descending channel, which shows it's that it's a little stronger versus weaker.
Social media has had some action, but this time it's been with Twitter, as we outlined that volume surge a few days back.
Yes, we did, and it's finally been back in play. Everyone's been like, when is Twitter going to come back in play? It had that 2-day move with volume that put it back on the map. Then yesterday, I think I mentioned that the prince came in, upped his stake to 5%, so it shows that selling is not going to happen. So maybe it squeezed some shorts. So you look at the chart here at Twitter. This was your first day, and then here was your follow through, and then it wound up holding. Remember I showed you this right here. I said as long as it stays above this, it's in the game. Then yesterday it cleared that pivot. So the question is, how high can it go? I think one spot is right here. This is around 32, and then perhaps even a gap fill at some point. you know, it looks kind of, that's not the easiest looking pattern here, but some were saying this could be like an inverted head and shoulders pattern, you know, where you have left shoulder, head, right shoulder. Here is your neckline that it, you know, basically broke above, and, you know, 2250 to almost 29, that does give you at least a move up to here. So, you know, it's something to just have back on the radar and trade. You know, there'll probably be more intraday action because the range is wider, and maybe just buy some dips and stay with that. As far as Facebook, better pattern. It hasn't been hurt. There's not, you know, it's different. It's trying to hold higher. I'd love to see Facebook hold this 91-ish area. If it holds this 91-ish area, at some point, if it wants to do a pre-earnings run, which isn't for another week or two, it gets above this 94, and then the old highs are all the way up here. So at this point, trying to hold higher. I think guys like me would love to see it hold above yesterday's low, or at least, you know, not close below it for a little bit more momentum. I'd love to see this wake up even something like today.
The metals still can't get above resistance, but haven't fallen apart. What are some levels to watch there today?
Yes, I keep promising all my commodity friends I'll put the metals on there because they think there's a hope now that you could see higher prices, and they also think the dollar could see some lower prices. So you look here at the GLD, you know, there is, I guess, it is acting somewhat better where it's not just falling apart after a move. You could say as long as the GLDs hold above, you know, this spot here, give it a little bit more room, 108, 109, there is a chance it takes out this little pivot of lower highs because you have a high, lower high, lower high. So that would happen if it took out just a 110.30 with authority. Then perhaps, you know, you get this move to the 200-day, which is around 112, and, you know, that's a decent percentage move. You know, so if you're looking for a trade, it's still in the game to potentially take this out and hit resistance, and that would be something different for the metals versus just failing into resistance.
And lastly, we do have Fed minutes at 2 o'clock today. Do you have any closing thoughts?
No, I just think that the market is focused on the Fed, but they're not exactly sure what they want. You know, back on that Thursday when they didn't do liftoff, the market sold off. You know, you just really quickly go back to the chart of the spiders. They didn't have liftoff, and the market wanted it then, and that's where you had this little breakout topping tail, failure. Let me just put this here. My mouse is a little sticky. Uh-oh. There it is. So here, and then on the jobs Friday, it was a horrendous report, weaker than expected. You would have thought we could have fallen apart, and then we rallied back up. So today there will be an emphasis on the minutes, so we'll see, you know, what type of move happens this time. I think after Janet Yellen spoke the last time, she made it seem like it was balanced between hawks and doves, so we'll see what the minutes say. I'm not going to overly focus on it and try and make it like I'm an economist, but I will say people want the economy to do decent, you know, and I guess Goldilocks, which was good for the stock market, you know, I guess might be good again. So mixed is better than them thinking that, you know, the world's going to fall apart. And at this point, as long as the spiders stay above this gap here from Monday, which was 196.33, it's hard to get too bearish. So above this, try and stay in some longs. Maybe we break out a close below this, and maybe they shake the tree, and, you know, your next spot comes in a little closer to 194 to 195, which is right there.
And that is your morning call. Happy trading. Have a great day.